What's up, YouTube? Welcome back to the Wallet Monkey channel, where we give you all the credit intel you need to grow your wallet. Today, what I want to talk about is a slightly different topic, still under that personal finance umbrella. We're going to talk about store of value during hard times. I figure this is pretty relevant considering what's going on. Ukraine, Russia, just the world in general seems pretty chaotic. If you thought the last 2 years of the pandemic were bad, well, welcome to 2022. So we were kind of promised that we were going to get out of this recession when it looks like the recession is actually just starting. So what do you do at times like this? Let's talk through this. I really just want to show you where everyone else is and help you step out of the mindset of retail, which we often call dumb money in markets, and into I guess, a different perspective, right? Because the perspective that is required to position yourself properly in times like this is understanding cycles and not understanding where we're going, but understanding where we're at, what part of the cycle we are at. There's all kinds of books and training on cycles. I would say it's probably some of your best time ever spent. Now, sitting around watching YouTube videos, doom and gloom, looking at zero hedge all day long, those probably aren't the best ways to spend your time. I could make an argument for watching any mainstream media outlet is probably the worst ROI, risk to reward of your time possible. Because you're sure to get triggered, you're sure to find something that's going to upset you, and the beauty is now that you've got the internet, so you can just go argue with people all day long and get even more nothing done, if that's even a way to say that. But the amount of time wasted on this stuff is truly mind-blowing, and I'd have to say that that's probably part of the plan for a lot of people. Is if you're willing to fall for it, then here it is. Here's the party. So I'm hoping that all of you in this community are not like that, right? And so we're trying to elevate our minds. We're trying to wrap our head around what's going on, or at least where we're at. And really, I guess the next thing is to have enough competency in that to understand what to do. Yeah, what to do for you and your family. All right, so let's take a look here. I got two charts that are probably some of the most important charts you could look at, which are, okay, retail is usually late. That's why it's called dumb money. So retail is like your normal everyday investor, your normal everyday guy who's not really paying close attention to anything, which I don't understand how they've sucked us all in over the last couple of years. I don't understand how you could not be paying attention. Again, unless you're spending all your time arguing on the internet with strangers and most likely bot accounts. Again, what are we doing here? So we need to look at revolving credit, we need to look at savings, and we need to look at where are people putting their money. And then we could even layer in other things on top of that. Like you could look at sentiment, fear and greed index. You could just look at, what everyone thinks is going to kind of happen next. And what you're hearing in mainstream media is a lot of times sentiment. So just tuning into that for a couple minutes just to get a sentiment check, and you can figure out where we're at. So right now it's still fear. It's still, we're inches away from nuclear war. It's everything's bad. Where is the tailwind to this? Like, where is the positive news that's going to start spinning out of this cycle? Right? There really isn't much. That would also explain probably why gold just touched $2,000. By the time you're watching this video, it might be a different price. I'm looking at it right now. Let me just click over. I got it pulled up here. You can look at XAU to USD on TradingView. You can look at it for free, but you'll have ads in the lower corner. It is $1,992. Okay, when gold inflates by itself, when gold price goes up by itself, it usually means people want what? They're fearful and they want store of value. Gold is always looked at as a store of value. Now it gets more interesting when you also see the US dollar inflating, which it is right now, and the US dollar price going up while gold is going up simultaneously. This is something, if you want to dive into this, you can look at the milkshake theory. The guy Santiago Capital behind that wrote that and talks about that. He talks about a period of time where things will, commodities and fiats will pump together, right? So anyways, S&P is down. It's Sunday, so it's closed still, but cryptos are down. Bitcoin is down, but Bitcoin sold as a store of value. But yet, as I'm shooting this, gold is running and Bitcoin is at $38,270 or so, and it's not looking good. We just had a bearish weekly candle, and so that's not looking that great. So again, Bitcoin really isn't as much of a store of value as gold is. Right? Because gold's had a longer time in the markets. Bitcoin's only been around for 13 years now. Also, too, Bitcoin tends to still follow the stock market, which does not mean that it's a store of value. It would actually mean that it's a risk asset, just like any other stock, right? So back to my point. Revolving consumer credit. This was from man, where was this data from? I think this was from February, beginning of February. Record high amounts of revolving consumer credit being taken out. Okay, now let's look at personal savings. This is the St. Louis Fed. This is called Fred data, okay? And we can see that it isn't always up to date, but the last little spec that they've got here is January of 2022. And we see that we are right back down to nothing, right? Pretty much neutral standpoint of personal savings. We had all-time highs, which were good. That was great. And now we don't, okay? Inflation, let's quickly check in on that. This was the last inflation data on February 10th, which is pretty crazy. So we should get it in like 3-4 more days. It's probably gonna be 8%. Now 8% CPI, you gotta understand, they just changed the CPI model to be more of a weighted average of the recent 12 months, which means that you are going to null out and remove a lot of the truth, let's call it, in that historical data by removing so much from the data set. So it is a means of manipulating, yes. So the estimated inflation rate, if you go off the old CPI models from the 1980s, it's somewhere around 15% right now. Okay, so it's about double what CPI says. Nonetheless, pretty high, right? Personal savings, low. CPI, inflation, high. Which CPI, again, that doesn't really account for your eggs, because if your eggs go from $1 to $2, that's 100% inflation. So this inflation rate means nothing when it comes to what you're paying for. We're seeing the surges in gas now. We're seeing surges in wheat. Now we've got real issues hitting the board. So inflation, again, means nothing, because if you got to go fill up your gas tank, that's all that matters. And that inflation that you're seeing going from, $2.75 to now almost $7 a gallon in most parts of the United States, that is a lot different than 7.5%, correct? All right. So it's all relative. Now, the next big thing, and this is probably like where I'd put most of your focus in, and this is the tragedy in everything that we're seeing right now, is that most people right now are not holding what Bank of America, global investment strategies, what all these different sources at the bottom consider real assets. There's a definition to a real asset. That is a commodity. That's real estate. That's a collectible. That is a boat. That is land. That is something, real, I guess. And then financial assets are stocks, bonds, treasuries, equities, right? That's what that is. And they've been tracking this since 1925. So what's really depressing about right now is that we're at an all-time low for how much retail is holding real assets, right? An all-time low. That's crazy right now. It should be at an all-time high, but instead it's at an all-time low. So people, what are some assumptions and some deductions we can kind of make off this data? People are not saved up. They're not holding their position in real assets. It's mostly in speculation, the stock market, which has been down all week, and it will continue to be down as long as headlines about going to nuclear war with Russia continues to prevail. And revolving credit is high. And so what did I mentioned earlier that retail is usually late. Well, what I mean by that is retail's all now flooding to gold because they're like, oh shit, oops, we missed it. That's usually like the aha moment that retail is having. And that's when you see hordes and, large amounts of people flooding into a move. And usually the move is, it's already late, right? Like right now, to be buying into gold, you're technically already late from a technical standpoint, from many different standpoints, is that in this part of where we're at in the news cycle and the fear cycle is you're late. If we were to look at the fear and greed index, actually, let me just pull this up really quick. Here we go. So this is pulling in from all of it because I believe CNN is really where you get the big one from. Here's crypto, extreme fear and greed so it's money.cnn.com. 17, extreme fear. So we're essentially across the boards in speculative risk assets like equities, like cryptocurrencies. Yes, I know Bitcoin is supposed to be a store of value. Yes, I know Bitcoin is amazing in a lot of ways. Clearly, retail isn't looking at it that way because they're leaving crypto and they're jumping into gold. Okay, now how long that lasts and what these things pump up to, who knows? It's just going to depend on how a lot of this plays out, right? But I'm just pointing out to you like the pieces of the cycle and the parts to pay attention to. Now, I could also dive into treasuries and we could get into like negative rates there, That would probably be, I'll save that for another video, but these are really like the big pieces that you need to pay attention to understand where we're at, right? So anyways, I know this is a little bit different of a video. If you like this sort of thing, help me get in front of more people. Just click the like button or comment below. That helps the algorithms. That does this whole little thing here. And also too, like, let me know some other topics that you might want me to cover within the personal finance, getting more into macro spaces, right? Do we want to talk more about crypto, like most other personal finance channels are now? Do we want to get into that game, or do you want us to talk more about just maybe some indicators to see where you're at in the cycle? You let me know. And then, of course, if you're brand new here and you like this sort of thing, or you found value from this video, stick around. We shoot valuable videos like this, hopefully all the time. Subscribe, hit the bell notification, and turn it to all so you don't miss out on future uploads. See you again real soon, my friends.